Good morning, good afternoon, and good evening to you. This is going to be another episode of the live trading desk brought to you by SageFT.com review and Rev-UP. It's going to be a Monday edition. We got a special edition for President's Day since there was no trading yesterday, Sunday night. We'll just go ahead and put it out today. Okay. All right. Now, if we would have triggered the retracement of this tail, I would have continued to be bearish. Okay. Now, the market has told us, okay, market generated information says they liked it. All right. So now let's go back to the beginning of last week. And we'll just use the daily chart, maybe the 4-hour chart to do this. There's no reason to think anything smaller than that because it's just a fractal of what we're looking at. Here's Monday, right? This bar right here. This bar right here made up all of the gap and all of the body of the bar from Friday. So then when we go to Tuesday, it says, oh, no. Oh, you think, oh, we're going to go down. Just kidding. We're in position one. We're going up, right? 200 simples moving up. It's hard to see, but it's right here. Your 20 period is right here. And your 8 EMA is here, and we're above all of them. Let's go to the next bar. That's Tuesday. Here's Wednesday. Oh, the bears are back. Okay, here we go. Shkaboom. Wrecked, right? All of the people that shorted right here the next day got absolutely eaten alive. All of the people that took profit or a loss right here, stopped out, stopped into profit, stopped out for loss, it doesn't matter. Those people are the ones retching as it moves higher. As it moves higher, what's happening is the sellers are perpetuating their own doom. All right, so now Monday, Tuesday, Wednesday, Thursday, and how does Friday end it? With a perfect market maker delight, meaning it doesn't go anywhere. Or what do they call this? A doji, whatever, shining star, twinkle, twinkle, little star, whatever people want to call this here. Now, let's go back to the context. All right, let's bring context in. We just looked at last week. I'll look at it real quickly on the 4-hour chart. Very, very obvious once they start getting that thing going. On the 15-minute chart, if we look at this bar, where was it? I might not have enough data on it. Oh, there we go. The one that cleared all of it. All right, here we have found the culprit on the 15-minute chart. I knew I had a box around it. This was the opening at 6016. I remember looking at it going, whoa, we could really, really start crashing. Or they're going to buy it back. Okay, now if you remember, once this bar closed right here in the free Discord, discord.gg/SageFT, come in and hang out if you've never been there before. I typed in bullish, starting to get bullish. If we fill through this gap, bullish. Okay, now think about the significance. If you were a weak trader, you'd be looking to short the gap fill. Okay, not just close for profit. So what we did is we said, okay, now that's the level that we're watching. It's 6050 and 6016 or 6015 is what I said. And if you scroll out, we tested right down into that and it said, thank you. Greatly appreciated, right? The draw on liquidity into the, what we would call a market inefficiency is what it's actually going to be, allows them to pick the low-lying fruit. Now think about this. If this is the apple tree, got the branches hanging off of it, are they going to pick the apples off of right here? Right here. Weak players pick the apples off of here. Pros pick the apples up off of the ground. If this is the trunk of the tree, the apples fell to the trunk of the tree. Think about that next time. Think about how that would be a draw on liquidity, a fair value gap. Just think about the apple tree from now on, right? Branches are hanging off of it up here. Bloop, apple falls. Some people try to pick it up here. Not yet. But you could just pick it right off the ground if you want to. If you're there early enough before the deer. Okay, perfect. And then what you want to think about is it just doesn't stop. Okay, so that brings us to where we are now. Folks, this right here in context is a very bullish candle pattern. But what's the context? Perfect. I'm glad you asked. We'll look at it on the 4-hour chart. Actually, on the daily chart, it's a lot easier to see. This gap right here has been drawn the whole time. It's very, very important to me because it was a very, very bad outcome for a large basket of stocks that have been holding the whole entire market up, or as perceived to do so. Not to mention, it's directly after a fresh test of an order block at all-time highs. I'm locked into this right here. What are they going to do with it? Okay, so it brings us to, well, what they tried to do here is they got it way above it. Fail, really, really fail, really, really fail on the next day, and then they buy it back, buy it back, buy it back, buy it back, buy it back. Now, I want to remind everyone why the stock market is doing this. Everybody knows the economy is not as good as people think it is. We all know that if you have a regular W-2 job, you are in jeopardy of losing your job here soon, maybe in the next couple of years. You don't know it yet. You don't want to believe it yet. The management hasn't led you on to believe it yet because the management doesn't know. But I want to remind you, everyone that's watching this video, anyone in the world, I don't care, whatever. This is what your grocery bill looks like. This is why the stock market keeps going up. You pay for your groceries in dollars. You pay for the stocks in dollars. Your food is valuable, okay? The value is it keeps you alive. Okay, so that's the flat value. Let's just think about that as the utility, right? Baseline utility. So think about the value of it doesn't increase. The cost to maintain the same value, your food, right, to keep you alive, increases. So think about stocks the same way, right? They don't have to be increasing in worth or equity or it's actually worth more money because they're growing the bottom line and they're increasing the foothold in their space. The stock price could be increasing because they are literally paying with dollars, which it takes more dollars to buy each good. I want to remind everyone the definition of inflation and the reason for inflation. Definition of inflation is not everything becomes more expensive. Okay, that is the symptom of inflation. Inflation is caused by too many dollars chasing too few goods. We either need to produce way more goods, which knocks the price down, okay, or they need to stop printing so many dollars. Now, they're starting to print less dollars, but the way that they stop the supply side economic freight train is they have to degrade the demand. Okay, therefore, now you're going to see more interest rate increases. It's what we've been talking about the whole time. Them lowering the interest rates, as you've heard me say from the second that they lowered them, right on stream. They cannot, the worst thing they could have done was lower interest rates in this type of environment. We are facing stagflation, and stagflation is worse than inflation. Okay, stagflation is where inflation is rampant and the economy is flatlined. That's what's happening now. Oh, my friend says his business is booming. Oh, my friend says his business is booming. Okay, enjoy it. Subway started to come out with their value meals. McDonald's is starting to come out with value meals. That's how this works. That's how this works. That's going to do it. I'll see you Tuesday morning, 8 a.m. live on all social media platforms. The Live Trading Desk on YouTube, SageFT.com for more information. We'll see everyone tomorrow morning. Thank you.